Alright, to restart, we will be going over inversion fair value gaps, IFVGs. Yesterday we went over fair value gaps. Now we will be going over IFVGs. So as I said yesterday, when we have price, right, what does price do? We have these highs, we have these lows. Whenever we make a big move, a gap gets formed. But yesterday we talked about how the price should just come in, respect it, go higher. But in this circumstance, we are now going to be talking about the other side of the story where it just completely disrespects it. So in this example that I made over here, let's remake this. Say we have price here, right? This isn't maybe on the higher time frame. We have a gap here, and price is slowly trickling, boom. Now immediately as we tap in, we start to push lower. We go here, here, here. Say here we have another gap, okay? From this point on, there's two scenarios that could happen. One, we could disrespect this gap, continue pushing lower, then maybe target these lows. Or we could just do the opposite and respect this gap and then possibly push through this gap and go higher. But most of the time, when you have something like this, it's probably going to continue pushing lower, inversing this gap, making this trade a super easy trade. So that's how you can use it in your trading, right? Is essentially you can pair the two together and say, okay, if we respect one gap and then inverse one gap, boom, there's a great trade probably setting up, and we can try and catch a trade either lower or to the upside depending on how it's working. So essentially the whole basis behind this is that the gaps, they'll either get respected and go higher, or lower obviously and go here, or it will be disrespected and push right on through, making this an obvious low that it might take. Or again, could just go to the upside and go straight through to the upside. So that's how those gaps are formed. Now let's go ahead and go take a look. Now that you guys know what inverse gaps are, you know what fair value gaps are, we're going to go on over to the playbook that I showed you guys yesterday. Wait, I saw a question. So gaps are typically respected, but if rejected, it's an IFVG. Correct. That is exactly right. So let's take a look at this playbook here if you guys are looking at my screen. Okay. Still haven't gone over CISDs yet. That'll be for another day. I think that's sometime this week. But we now know IFVGs and fair value gaps. So let's look at this first example. What do we have? We open up, go higher, gap in price. What happens? We tap into that gap. We now have another gap that forms here, being the red one. We inverse that gap, coming out of this gap respected, and then a CISD, which we'll go over later. This gives you a great trade. You can enter immediately on the body close there, and this can be a trade to the upside, depending on if you have targets up here or whatnot. So this is a great trade right here. Another trade. This is just simple. We have a gap going up. We respect the gap, go up again, create another gap, respect the gap, go higher. You can enter on this candle or even this candle, depending on how confident you are. Another example here. This one is my favorite candle, or my favorite one. So essentially we get a gap to the downside, we respect the gap, we go lower, create another gap, and then all within one candle we inverse both of those gaps within one candle. Now this setup is not as valid if we don't inverse this one. So say we inverse this fair value gap, but then we fail to inverse this one, then wait till the next candle, see if this gets inversed, because we'll talk about traps another day. But a lot of the times the market likes to trap people, and it'll inverse one gap, it'll come tap into this gap, people think it'll get inverse, and then it just pushes lower due to it being a trap and not actually wanting to inverse this gap. So that's one of my favorite setups right here. This setup is amazing, but again, we also have more to look at. So what do we have here? Well, okay, yes, you can enter just on a inverse fair value gap, but this one's even better because what can you do? Okay, we have a gap getting formed to the downside. We inverse that gap. We create a gap as we inverse it. What do you see price does? It taps into that gap that was then formed, respects that gap, pushes higher, and you can enter right here, literally just targeting this high or whatever highs you have above that you want to run. But let me then talk about something that you never want to see. You never want to see two inverse fair value gaps together. So in this circumstance, right, we have a gap gets formed up, we then inverse that gap, creating another gap, and then we inverse that gap again. yes, you can trade off of this, but it's not the best, because most of the times when price does this, it's kind of in a pickle of where it wants to push to, where it wants to go, therefore saying that price is most likely going to consolidate and kind of just dance around a little bit and maybe not do exactly what you want. But in these circumstances, this is telling you everything you want, because you're getting, in all these circumstances, right, you're getting the respect and the disrespect, or you're just disrespecting all the gaps, and it's a very valid setup. So let me go back on over to the chat. What's up, Ito? So those are kind of how I use fair value gaps and inverse fair value gaps. It's pretty simple and self-explanatory, but just know you never want to see, as I said, you never want to see a gap get formed up, we go down, gap gets formed, and we go up, right? You don't want to ever see that. You want to see kind of both of them be used together. So if we inverse a gap, maybe if we form a gap here, you want to see respect go lower. That's a good setup. Or maybe vice versa. We see gap gets formed here, respects, gap gets formed here, disrespect, and we push higher. Those are what you want to see. Obviously, you can go to the downside with that as well. That's kind of what I look for and how I use the fair value gaps. And then going into higher time frame, say we have a 1 hour fair value gap. So this, for example, right here. Okay, we have a big old gap right here. What do we see happens with price? Well, price it taps into this gap, rejects off. We then kind of trickle around, and then we eventually close below this gap. This candle right here officially closed below the gap, and that therefore then started this run to the downside. And as you see, we just absolutely tanked and kept going because of a gap like that. Even on the 4 hour, what do we have? A gap right here, as you see, gets respected, pushbacks up, and then we eventually close below the gap, then starting this whole short move that you could have caught if you just had seen that gap, and we kept pushing lower because of that. So that is how you can use it. And then again, vice versa. Say if you were looking at it like this, you could have had a bias. Okay, we respected this gap. Okay, I think we're going to push higher, maybe inversing this gap. And then as you guys will see what happens here, right? What happens? Okay, we're kind of respecting that gap. Okay, we're rejecting that gap now. And then boom, now we have respected a gap, inversed a gap, and that's literally one of the setups in the playbook where you could have caught and you could have rode this almost all the way basically, just because of that setup. And then as you see, what do we then do again? Well, after we've inversed the gap, it's clear that we're probably going to the downside. What happens? 4 hour gap gets formed, we respect the gap and continue to push lower. So that is how you can use it on the higher time frame. And then obviously the playbook entries that I showed you, then if you have a bias like this and then you're looking for an entry all the way into 1 minute, you just pull up the playbook that I have in Bootcamp V1, as I said, and you can just take a look at this and be like, okay, I know my bias, I know what I'm looking for, let me just see one of these 4 setups occur, and I will take a trade, and you will be very well off. But again, a lot of these setups that I've been taking, they're all these exact setups. They're mainly the CISTs. I haven't seen the most, I've been taking the most inverse fair value gap plays, but I've been taking the regular fair value gaps, so on and so forth, and unfortunately they just haven't been going in my favor, but that's just part of the game. It's not always going to be in your favor, and it just is what it is. No, I usually do not hold a trade. The piece of the pie model is essentially just catching. Like if I'm just looking to catch something within this move, I just want a small piece of this pie. So whether it just be, let's say for example here, I would literally only want 75 ticks of this whole move out of all of this, right? I never want the whole move. I just want a small piece of it, and I move on with my day, and that's about it. How long do I usually typically hold a trade? Usually, my trades are usually anywhere under 5 minutes. They happen really fast, and they go usually in my favor. Unfortunately, recently, not been going in my favor, but when they do, it happens really fast. TB gets hit really quick, and you're done for the day really fast. Essentially, Scott, yes. And then even deeper, we'll talk about order blocks, how to incorporate order blocks, so on and so forth, and we'll go even deeper into all that. Essentially, yes. I do plan on pivoting a little bit higher, so my plan is moving forward on these alpha funded accounts that I have. Basically, I mean, you have to scale up to get 2 contracts, but basically what I'm thinking is essentially I will do 2 contracts at 100 ticks, or it'll be like 75 ticks, so I'll be risking a little bit more. But essentially, I'll take one out at 145, so catching my piece of the pie. And then if I have a runner or something that I think, like if I have a target all the way up here, I will then let that one contract ride all the way through and try and catch that bigger move. Yeah, that is the only unfortunate thing about Apex, but I mean, Apex is going to make you a really good trader. It's going to make you very fundamentally sound, and you'll learn a lot from Apex. So that's why I do also recommend them. Are IFVGs more trusted than fair value gaps since it's not normal? I would say yes. IFVGs are going to be your best friend. I think they're better because they're just going to tell you more. So like say especially on the higher time frame, right? We're in a downtrend, right? And we get an hourly fair value gap here. If we're in a downtrend, what are you going to expect? Okay, I'm going to expect we tap in and go lower. But if we're in the trend, right, maybe we just take in liquidity, and you see we inverse this on the hourly, this could be all that you need to know that, okay, the move is starting, we're going to probably push up to this high just because we didn't respect this gap, and most likely that is the end of the move to the downside. Obviously, you can then do that to the upside as well. So in my opinion, higher time frame wise, yes, inversions are going to be better because they tell you just more about the story. But regular fair value gaps are just as useful, especially if you're looking to then like carry on. So say like in this we inverse, and then on the higher time frame we're now respecting a gap. That'll be all that you need to know that yes, the momentum has probably changed. Then diving deeper into this, talking about candle closes, right? The only way a gap is actually fully inversed is not when it wicks down into the gap and goes through, right? Because it can wick down and then the body can close here, and that's not an inverse, right? It could still then respect and go higher. The only way a gap is inversed is if the candle fully closes below the gap. That is when the gap is inversed. It is not inversed just because of the wick. It is inversed once the candle fully closes below the gap or above the gap, and that shows you that it's a inverse fair value gap, because there are so many times where it's going to wick all the way through and then close within the gap, and then the next candle is just going to look like this, and you just got screwed because you tried to enter too early, right? You need to wait for the full close to understand if it is going to be disrespected or respected based on the close. Y'all got any more questions on that? Based off all these concepts that we've learned in the past 8 episodes, you can make an amazing strategy just out of this and be very well off. But again, every episode from here on out, it's going to be getting deeper and deeper into how I use my strategy, more confluences, more things to add to the strategy, and just get even deeper into what it is that I do. Exactly. Once it closes disrespected, there is a much higher chance of the trade playing out, and that is so true. Because just because maybe it looks like it's going to close below doesn't mean it will fully close below. It depends on what time frame you're on. If you're on the higher time frame, wait for that retest, see if any other gaps open up, and then go for the trade. But if you're on the lower time frame and you already have your bias set, or you already have the idea of the direction it's going to go towards, and you get any of those playbook entries, go ahead and enter, especially if it's paired with a CISD, and you'll have a lot of success. Yep. Right. I'm thinking of putting my stop loss right below where I bought it. Where'd that be? What do you mean by that? You might have to go a little bit deeper on that. Like putting my stop loss exactly where I buy it so it doesn't go in my favor. Yes, so basically the only time I do that is, so say we have a range like this, we've just inversed a gap here, boom, we inversed, I entered right here. But say my target is like past this point, right? Maybe there's a target up here, right? And that's what I'm targeting. I would go break even at this point just because essentially as soon as the trade gets to here, I'm going break even, so my stop will look like that. And there's basically no stop loss. You just literally have nothing on the table except to gain. And essentially the reason for that is the market, as I said, the way the market moves is it takes orders to take orders to take orders, right? So who am I to say that once it takes this order, we couldn't then go back down, take this order, and then push all the way up and take these orders, right? So that is the safe way of going about it, is once you get your entry, once it takes any type of orders, even if like it takes this orders and then goes break even, I'd rather take this order, go break even, than it takes this order and then stops me out taking more orders and then pushing higher, right? I'd rather take the gamble that we're going to push here and then possibly have the chance to keep pushing through with no money on the table. If that answers your question. Do y'all have any more questions relating inverse fair value gaps or anything I've gone over today? No, sir. So yeah, today I want you guys, you can send it anytime in the chat. Just go into your, just like how we did yesterday, go find an inverse fair value gap on the chart. Send it to the group. I can look at it for you. If you guys want to do that now, go ahead. I'll make sure you guys understand it. And then essentially tomorrow, let's see what we're going over tomorrow. IFVGs. Okay, so tomorrow we'll be going over CISDs. That's essentially the last thing that you would need to know to really understand my model. Thursday we then go over order blocks. That's a little more advanced, but that's really after Thursday is the last thing you need to know. SMTs will also be useful. There's still other, like a lot of little things that are still going to be useful, but if you're a beginner, you can have a lot of success just with CISDs, fair value gaps, inverse fair value gaps, and liquidity, to be completely honest with you. But then diving even deeper is when we'll really get into things and really make things even better. Alright, I'll let you guys go find a couple inverse fair value gaps and then we'll call it there. Scott. Beautiful. Yep, nice little inverse. In that circumstance, though, obviously, I mean, it didn't really go in favor too much of the inverse. Oh, wait, no, yes, it did. Sorry, I was looking at the wrong thing. So, yeah, that's a perfect example. We inverse, we respect the gap, and then keep pushing forward, so that's perfect. Perfect. So, again, the IFVGs, they work across all time frames at any time, any moment, they will work. Alrighty, boys. Well, if you guys find any later, just text them to the group. But with that being said, I hope you guys enjoyed this video, and I will see you guys tomorrow morning for live trading, and I'll see you guys tomorrow for the CISD video. That being said, I will see you guys tomorrow. Do this, everyone, and take it easy.